Pullback Failure by Urban Forex. All right, guys, welcome back. Welcome back. All right, so as we've discussed last week, we were talking about the trend pullback failure concepts. Now, let's take this onto a chart level. I'm going to do my best to make sure the video is short. I'll try to keep it under 15 minutes, but I really want to get this information out to you, especially since you've learned the concept now. Now let's take it to a chart so you actually understand at times when the markets are actually turning around. So this edge is quite powerful. It helps you to understand how long it takes for the markets to turn around and change directions. So I've purposefully removed the time frame on top and the time on the bottom because I want you to focus on the chart and the concept itself based on what is happening to price. Not is this a 3-minute chart, is this the 1-hour chart, is this the daily chart, weekly, monthly, blah, 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 blah. That is not the concern because this is applicable on any time frame. So if that's the question, that's your answer right there. What you need to understand is if this is your trading time frame, which means if you're a 15-minute trader and if this is 15 minutes for you, then this is how you read it. If you're a 1-minute trader and this is the 1-minute chart for you, this is how you read it. Okay? So try to avoid getting multiple time frame paralysis by doing too much time frame switching around, and that can really hurt you. So you have to be careful with that. So in this particular case, so assuming this is your trading time frame, so let's take a look at this. So the higher time frame is telling us the markets are in a downtrend. Okay, they're in a downtrend, and we have a breach and everything like that. And you're thinking, okay, give me a pullback, and I will sell it. All right, give me a pullback, and I will sell it. So what a trend pullback failure is it starts with an objective like any other trade, a cheese trade or a set one, set two trade. What is the main objective? The big boy is going one way, give me a better price, and I will join him because I want to go with him to the new lows that he makes. Okay, so the objective is to go make new lows. Okay, now the question that you need to always understand is if he does not make new lows, what does that mean? What does that mean? So that's always should be running into your mind of if it's not a new low, what does that mean? So having that said, let's get rid of all of this. Okay, so we have a downtrend running here. Then you're like, okay, well, let me get a pullback coming in, and I know buyers will start stepping in and we'll think about it. So as the market goes down, people are not selling up here. The majority of the public starts selling only once it starts moving, right? So if all the sell orders are down here, coming in, you know that once this thing comes up, not many people are turning into buyers quite yet, okay? Majority are just panicking deer in the headlights, basically. They're just like, they cannot believe what happened. They're panicked and they're shocked. That's it. So as the trend starts going in their way, they're relieved again. But once it turns around and it picks up speed for set 2, which we call, right? Don't forget, this is set 1 and this is set 2 now. It's picking up speed for set 2 and it's going higher. Then they start taking action and they get stopped out saying that, okay, it's actually a buy, and they start buying up in this area, correct? So they get dragged into the buy up there. Now, around these times, as we approach closer and closer to the money spot, as we're digesting this up move with some digestion here, further digestion down here, and then a money spot, we know that our job is to do a sell, okay? So our job is to do a sell because we've got a set 1, set 2, we've got a money spot, we've got the whole digestion phase, everything's rolling over. You know the drill, right? So at this stage, you are preparing to do the sells with that objective in mind that you want to make new lows with the big boy. Okay? This is why everything is setting up the way it is. It is gearing you up for joining the larger player. Okay. Having that said, you take that sell and the sell starts to go. It starts to go down and you're like, oh, what a wonderful start. Fantastic. I'm doing awesome. Trades are moving, you're doing well, you move your stops in a little bit, and then it just drags around. Obviously, because of your training, if it drags around sideways like that, it's time for you to exit or take action or remove some money, move stops to zero, etc., etc., etc. But a range is coming up way too early. It's a buildup is setting up. Why is a buildup setting up right now? What is going on? As you monitor this thing through, what is happening is it's slowly eating up and digesting this down move. Okay, notice the time it takes to do this. Then it goes down and then it aggressively moves up. This is now considered a trend pullback failure, which means he failed to make a lower low from set 1. He even failed to make a lower low from set 2. And once it's digested set 2, you now have a change in direction. This edge is called trend pullback failure. Okay, this will also simultaneously build up a overall higher low sequence. Okay, your low just got higher, right? This lowest point got higher. This is telling you the market is gearing up to change direction, which means that big boy that we thought would come around never came back. So the objective cannot work anymore to make new lows. So we generally allow all movements a couple of tries, right? All movement. That's why the set 1, set 2 concept. That's why the digestions have a couple of swings in them. We always generally allow multiple attempts from the big boy before we can say, okay, that's enough. So having that said, for those of you guys who are super aggressive, a movement that comes down like this will not suddenly turn around and do that. Okay, the chances are very low for a trend to do that. They will have to go down, then this, then that, then that, then that, and then take off. You see how long it takes to digest that entire movement? It takes a long time to get rid of the sellers. Okay, to get rid of the sellers, and the buyers just gobble all those orders up. Okay, nice and easy and quietly without shaking the market. Okay, all right, so having that said, once you know this information, if you can even line up for that specific day, for example, when he starts going up right here, instead of thinking, well, he's still inside this original guy who went down and he made this low, and then since then we've never gone above him, but we've never gone below here also, that means everything is inside a seller's territory. Yes, but now the situation has changed. Instead of waiting for prices to come above here and then doing your buys, you now can put together a case, if you want to put it. You can put together a case and a theory of, if I ever get any news that says New Zealand's strong, or anything that will tell me CAD is going to be weak, or even in fact oil is going to be weak, okay, then I can put 2 and 2 together and be like, it's a trend pullback failure coming up. And what we are thinking technically also lines up now fundamentally. I think we're clear. Okay, so you can build your case accordingly once you can see that, and then once that happens, then you can now then prepare to get on later on. Now, if you remember correctly from last time when I talked about all that risk management, right? Controlling risk. Make sure you're not so focused on taking this thing immediately because there was a range and you're like, range means a big boy is coming back. That means just buy it here. No, don't do that. It's too risky. Too risky. This is just for your exits. Remember, I told you that the initial time when the trend pullback failure is happening, the first area is always more dangerous. This is for the aggressive traders. Because it's still a downtrend, you're gonna get a lot of whipsaws coming down. Like, you see this, how it's coming down at you? But then as he digests this guy higher and higher, things start to calm down a bit more, right? You notice how this is less volatile than this area down here, right? That's why I said conservative traders, that's all you. Aggressive traders, that's all you. But be careful and expect this. So only trade after you see sudden movements like that look like the markets are going again. Okay, so I hope this example was very very informative to you guys. You can head on to your charts, look for a ton of these things. They're all over the place, generally around a area where you see the markets change directions. Those are the best places to look for these, and you will see that whatever time frame you're on, this logic follows. This logic follows of you cannot change a trend just on a simple one or two candles. You're gonna have to digest that monster nice and slow, which means that digestion process looks like set one, set two, failure, pullback, and go. Okay, again, set one, set two, failure, pullback, and go. Okay, so if you keep this in mind, you will have a better grips onto the market. Don't forget, with all of this stuff, double, triple, quadruple check it with correlation. Okay, that will really help you stay safe from this. Again, this is a much more difficult edge to do and requires a lot more patience. So please be careful with this. Okay, so let's move on to the next video where I'm going to be talking about an eclipse trade.